Hello and welcome back. If you're new to the channel, I am Dr. Stock, Doctor of Education, and I'm happy that you're here. In this video, we're going to take a quick look at an economic calendar, talk about the Michigan University Consumer Sentiment Survey that comes out tomorrow, and then also we're going to get to 3 stocks that I think are pretty opportune at this point in time, at least in the long direction, because right now we're looking for where exactly the action is going to be. We are nearing the end of Q2, which means that hedge funds, institutions are going to be doing some rotating out of plays that they've experienced significant upsides, such as big tech, that they're going to be rebalancing. Even if they do continue to hold those, that there might be some significant selling that happens there, but then also some significant buying that we have in some other areas. If nothing else, I think that these 3 companies are excellent trades in a timely manner. So, and like I said, these are all in the long direction. So for those of you who don't do any sort of put options or any sort of short selling, these are plays that I think are going to be excellent for you. And they're ones that aren't necessarily talked about every day. They're not on the hot list, the hot radar. And so that, in my opinion, makes them a little bit more predictable to see what exactly is going to happen based on the technicals that we see in the chart. So, with that said, in this video, I will be using Moomoo. Stick around throughout the video to find out how you can get up to 17 free stocks. So this is Trading Economics calendar that we have. Retail sales coming in at pretty reasonable numbers, and that measure can be pretty volatile. However, over time, if you do look at the trend on that, you'll see that there's nothing really all that surprising about it. It's good that we don't see it going through the roof, that it's going to cause inflationary pressures. That's the part that we want to pay attention to. Retail sales continue to moderate and normalize. Inflation will also likely continue to do the same thing. So the Fed, as I mentioned in my video last night, if you haven't watched it, go ahead and check that one out. It talks about the Fed pause in June and what I think is going to happen in July. And like I said, that video I did post. So if you're a subscriber to my channel, just go over to my channel, check it out. And if not, go ahead and go over to my channel and check that part out as well. So let's move on from there. Initial jobless claims, these have been trending upward. I checked on this since October of 2022. So when we actually, maybe even September. So here, September 24th, 2022 was our low point when we had a week where the initial jobless claims were 182,000. And you can see that we've trended upward since then. And that might be like, oh my gosh, are we really going to that high of unemployment? And the reason I chose this window is as soon as you include the pandemic in that, look what happens to all that resolution, all that detail that you had. You lose it as soon as that's in there, because we went up over 6 million jobless claims on Saturday, April the 4th. So that one, just like, it'd be nice not to exclude it because it's an anomaly, but just to kind of chop it down so that way, or at least have some more control over the scale that we see, that we don't necessarily have to look at that peak, so we can actually see what's going on with the rest of it. And that's why I chose this view that I did here. Now, I think it's also worthwhile. Let's bring in the Great Recession into this so you can see what initial jobless claims look like during that time. You can see that there was not a linear ramp, that we actually had a bit of a curve to that as it goes on. And at the peak of it, we were over 600,000 initial jobless claims. And right now we're still under 300,000. Although if you can see it on this video, you can't because my picture's over. Hang on a second here. I'll fix that for you. Let me go here and I shall hide myself. There we go. So take a look at that. And you might be able to see down in this corner, it is almost parallel to this 0 axis that we have here. However, it is rising slightly as we saw with that pattern. Does that mean that we're going to have a sudden spike? Probably not, but I think that it is a trend that's absolutely worth paying attention to. If we watch it go up over 300,000, that's a continuation of the trend. If we watch it drop back down to the low to mid 200,000s, that's still a continuation of the trend that we have. If we drop down below that trend, that's also significant, because that means that our labor market continues to be tight. So below trend would be dropping below 225,000, that we would be back to these lows that we have here that are right around that number, 228, 229, 225. So that's what I think is important to pay attention to when we look at jobless claims, is we're looking for a continuation of the trend upward that can signal to us that we're starting to get more layoffs, more joblessness, a loosening in the labor market, and then we have to look for other explanations as to why we believe that's happening. And we can look at the manufacturing indices that we have here, and there's still a lot of contraction that's happening here. New York is actually showing just a little bit of growth, actually a little bit of expansion that we have at 6.6, whereas previously it was negative 31.8. And so that does that does bounce around a little bit. And like I said, a lot of that is more important about trend than individual numbers. And manufacturing has been having some trouble as of late, something that we haven't really seen since the Great Recession back in 2008. Like I said, something to monitor. For right now, the economy still keeps on pumping and the consumers keep on pumping. So that is absolutely worth our attention. The markets most likely aren't very much affected by this. As a matter of fact, at the 8:30 hour, the markets recovered a little bit. And as of right now, it is 9:32 as of the time of this recording. And I didn't check on the market. We'll look at that as soon as I get over to Moomoo and talk to you about those. We'll take a brief look at the Qs and the SPY and see how things are going over there as well. So pretty good looking chart. Like I said, Michigan consumer sentiment comes out tomorrow, 10 a.m. Absolutely worth watching. I don't know that we get anything from the Fed Bullard or Waller that's really going to change anything for us there. All right, so consumer sentiment. We will see tomorrow at 10 a.m. if consumer sentiment has increased. If it has, that's a positive catalyst for the markets. That's upward pressure on the markets. Markets are pretty run up right now. So if we get an incredible read on this, something that would carry significant gravity, that could be something that allows us to push on a little bit more in the meantime. So something to pay attention to, something to watch for. It is something that can influence the markets. By watching that consumer sentiment, we do have, in the time that this survey was done, we do have the debt ceiling crisis dealt with, although then we still have the issue with the treasuries and the refunding. So that's something that can still weigh on this. So it is possible we come out even or drop a little bit on consumer sentiment. I do think that we come out a little bit positive on it. All right, so over to Moomoo. So let me drop that down and transition for you. So like I said, Moomoo, you can get up to 17 free stocks by using the link down in the description. And by depositing $100 or more, you do get a free share of C3AI. And just to show you where C3AI is sitting right now, it's about $40 a share as of the last time that I looked. It is one of those volatile retail plays that you have. But as soon as you have that share, you can do whatever you want with it. So right now, currently trading at almost $42 per share. So $100 deposit and you get 40% gain plus a $100 cash coupon on top of it. So you're over 100% gain as of you making that deposit and you receiving those rewards just for doing that. And there are other offers. So we'll get more into that later. I do want to talk about the Qs. There we go. And right now you can see we're starting to just a little bit of a stutter. Not much. And plus it's really early in the market right now. So we have to wait and see what's taking place right now. The bulls are trying to keep that pressure on, and you can see it with those slightly longer tails that we have. And yesterday, they still managed to squeak out just a little bit more. And so I have been saying that I do expect a little bit of softness to come into the markets before we start to continue to see any sort of run going on with the markets. And I do think that big tech is trading at a premium right now, that it's actually pretty rich. And so that brought me to looking for where else there are other values. Quick look at the SPY, and then we'll get to those three stocks that I was telling you about earlier. The SPY, I think, is a very similar story to what we saw in the NASDAQ. It's actually green at the moment, very narrow, little tiny doji candle that we have going on, and it is so darn close up there. It just turned red for us. So darn close as to what's going on right now. There's going to be a real fight, I think, today. And by the way, it is absolutely worthwhile to note that this is a 3-day weekend coming up. I expect some volatility going into Friday, that there's going to be a lot of closing of options because it is Options Friday as well. So we're going to have a lot of volatility in the markets. And I think that we have a bigger move in either direction when that happens. And possibly we even open and close close to the same spot. However, in between, I think that the candle itself with its wicks, not just the body of the candle or the legs of the candle, whatever you want to refer to it as, those, I think we're going to have something not so narrow like this. I think that we had on June the 13th, I think it's more like this one that we see here, possibly even bigger, that we saw on June the 14th in the market. The first one that I have for you is my friend CrowdStrike. Let me zoom out so we can see a little bit more of the shape that's going on. So CrowdStrike had its golden cross moment, and you can see the run up that it had. It set a little bit, started to consolidate some of that volume coming out of it. I think that this is a very bullish look that we have going on, that CrowdStrike is one that's going to show us a little bit more of that momentum as long as the market bias is with it. So if we get a major sell-off in the markets, that's something that's going to be downward pressure on this, probably drag it down. But if not, this is something that can take us back up to this previous peak at about $161, possibly push on all the way up to $167. And if you were looking for, also getting in this at about $154. So if you're looking for a trade for this, in at 154, out around 161, probably just a little under that, or out around 167, probably just a little bit under that. And that way you don't just fall short of it and get stuck in the trade and give up all those gains that you may have had. Now, also on the loss side of things, down around 149 or 148 would be where a stop loss would be set. So this is one I am long on in as a trade for CrowdStrike. Internet security is not something that's going anywhere anytime soon, and you can see the momentum that it's had, that it's spending most of its time above 50 on the RSI. We are nearing that 50 mark, and it is possible that we see a little bit of softness like we did before the next rally. So I think that this is bullish looking overall, but I think in the near term it's going to pop, and that's why it's good to put into this video. Now, another one that I have for you is ADP, automatic data processing. There we go. And this one's farther away from its golden cross moment. This is definitely worthwhile to mention. We are back up above the 50-day, and the 50-day is currently acting as support for us. We're currently above 50 for the RSI, and so that's bullish momentum that we have going. And right now it's struggling. If its 50-day holds, it's possible that we trade up from there. So this is possible that we are seeing a bottom in on this thing right around 210 with that 50-day in there. The 50-day currently sits at, there it is on my screen, about $214. So if we can hold that $214 mark, we might peekaboo beneath it a little bit. So if this is one that that you're trading on, a little bit of softness below that 214 so you don't get shaken out of your trade. But you also have to be careful because below 209, below 210 we'll say, because it's closer to 210, you can get some significant downside off of that, and then you really sacrifice your capital. On the upside, we want to break up at, well, 221.50 is about where this thing starts to resist. Breaking above that is going to be significant. After that, we have room up to about 225, and after that we have room up to that 200 and about 227. If we continue in a bullish direction on ADP, this is one that we want to see break up above that 200-day, and once it does, that is again a bullish sign, especially if it starts to use it as support, and that should curl the 50-day up towards the 200-day, leading to that golden cross moment. So that's just something that can play out with ADP. Now there's one more stock that I want to share with you, and that's Datadog. When we look at this one, and this one also having its golden cross moment, much like what we saw with CrowdStrike. This is another one that is just narrowing up, the bulls and the bears battling it out, fighting for control, and it is possible that Datadog starts to put, the bulls for Datadog start to win this battle and push it on a little bit higher. So for this one, it is possible that we drop down below 95. So you want to hold on to that. Like if you're trading this long, if you believe that this is bullish, I think that it is bullish, but that's my take on it. And if I were to trade this 95, maybe a little bit below, maybe give myself room all the way down to 91, depending on how I was going to play it. There's room on this one up to about 104, and if we break 104, then we have room. We're clear all the way up to about 111. And so given the ride that it's been on, and given this look that we have here, the way that it's shaping up, I feel like this is one that's also going to break for us. And when it does break, we have a psychological resist right around $100. If we get the momentum back in it, this is something that can really take off for us and give us a few more dollars to the positive side. If you want access to the app that I'm using, find the link down in the description for Moomoo. Like I said, you can get up to 17 free stocks using my link that you find down in the description. And I was telling you before about the deposits that you make, $100 or more, 5 free stocks, a guaranteed share of C3 AI on top of it. So that's a total of 6 free stocks and a $100 cash reward to boot. So that means you have $200 to trade with, plus you have 6 free stocks, one of which is currently trading over $40 per share, guaranteed. Incredible offer. So if you're looking for a trading app, and it is cross-platform, so you can even use your cell phones, it's on that as well. $1,000 or more, 16 free stocks, you still get the $100 cash reward. $5,000 or more gets you still the 16 free stocks, still the $100 cash reward, but on top of it, you get a free share of Tesla, which will be the one I would be gunning for, or a share of Google. Either one of them guaranteed, and either one of them, incredible deal. Tesla, not only does it currently trade for more than the share of Google does, I also like Tesla. I think Tesla has a whole lot more upside to it in the near term than Google does. Google has a lot of fight in front of it. It's a very solid company. But this isn't about Tesla or Google. This is about you taking advantage of the opportunities that are here before you. And it supports this channel. You're supporting yourself. It's a win-win for everybody involved in this sort of transaction. So that's what I have for you guys in this video. So if you like my commentary, you'd like to hear more of it, find that link down in the description for the Patreon. Click sign up. Support my channel, interact with me over in the private Discord. I've talked about all 3 of these companies briefly over in the Discord this morning prior to making this video. That way, my community members have access to that information first, and they can use that to help guide their decisions, or at least to focus their attention on the different actions that are taking place in the market and looking for those opportunities. And as a community, we can use it to help each other. Thank you guys for watching this. I really do appreciate it. Hit the like button if you haven't, subscribe and ring that notification bell to see any time that my videos come out. I am Dr. Stock, Doctor of Education, and remember, learning is earning.